Hello there, this is fairbinaryoptions.com, and part of our Binary Options Academy project, we are discussing today how to trade binary options with moving averages, as they are one of the most popular, if not the most popular, trend indicators that can be applied on technical analysis. Now, this being trend indicators, it means that we are discussing about an indicator that is applied on the screen, on the candles, and not like an oscillator with the window here to the downside. So let's see how to put a moving average. Insert, we go under the indicators, and under the indicators here we have what? We have trend indicators, we have oscillators, volumes, or custom. So under the trend, because we just said it is a trend indicator, we have the moving average. This moving average, if you click on it, it has the following parameters. This means 14. What does it mean 14? It means that it takes into account the previous 14 candles. So this would be a moving average that takes into account the previous 14 candles. This is an hourly chart, as you can see here at the top, and it means that it takes into account the last 14 hours in order to plot the moving averages. And then you want to know what moving average you want to analyze or to have on your screen. You have the following options: the simple one, the exponential, smoothed, or linear weighted. The vast majority of classical technical analysis goes for simple moving average. The exponential one, it is changing a bit by the time that new candles are being added, and it may be used mostly with the Bollinger Bands indicator, like we discussed on the Bollinger Bands, but I will go with the simple one. And then this is the color of your average. Let's say the levels, you may have levels, a visualization on all time frames, and if you click OK, that would be the simple moving average that is being plotted on the screen. This is the Euro US dollar on the hourly chart, as you can see, and this is the moving average with the 14 period. What does it mean? Let's go on the data window here. If you take any one candle, let's say this candle, this red candle in here, well, this red candle in here, look at the prices. It has, the opening is 1.1299, the high is 1.1300, the low is 1275, and the close is 1275. But look at the MA, or the moving average. The moving average is 1.1270. What does it mean? It means that this blue point here, the 1.1270, it is being plotted or projected on the screen based on the previous 14 candles, because on the period when we added the moving average, we said that it should be plotted on the last 14 candles. So if you go and take the shape from here to here, so from here to here, we go with the last 14 candles, basically. So these 14 candles have an average, the moving average, of 1.1270, and then price actually closes as at 1.1275. What's the standard interpretation? Well, the standard interpretation with moving averages is that every time a moving or price stays on above the moving average is a bullish interpretation, and every time price goes below the moving average is a bearish interpretation. So in the first instance, or the first case, we should look into buying call options, and in the second instance we should look into buying put options. As simple as that. How to actually trade binary options? Well, like mentioned a bit earlier, we may buy call options on dips into the moving average. We may buy put options on spikes into the moving average, and this normally represents the classical way to trade binary options with moving average. However, it's not that easy. I mean, you heard about the golden cross, the death cross, when different moving averages are crossing in order to find the right implication for a market. It goes without saying that the bigger the period the moving average takes into consideration, the major or the stronger the support and resistance level that the average is providing. So stay tuned for the second part. Let's try to apply the most classical moving averages on the screen and then to see the standard interpretation.